innovation solves problems. And you showed a few charts at the beginning that suggest that some of the innovators out there are solving problems. I mean, I think the most dramatic example of it to us was the behavior of Bitcoin last week. It absolutely took off. It was a flight to safety vehicle. And so it is really proof of concept that innovation solves problems. There are, in Bitcoin, fully decentralized, fully transparent, auditable, which is addressing all of the banking's problems right now. And so a flight to safety, a little bit of an insurance policy. There's no central point of failure in Bitcoin.
Caroline, ARK has 2030 calls on Bitcoin, the most bullish case around 1.5 million on Bitcoin, the most bearish around 250,000 on Bitcoin. Somewhere in the middle, you have around 682,200. That is the sort of base case there. Interesting at a time when no one is making that kind of long-term projection.
Yeah, and Cathie, we know you're a long-term investor with long-term calls, but what on earth gets us to that bull case of almost $1.5 million per Bitcoin if a bank crisis doesn't?
One of the things that happens in a crisis is liquidity dries up. So that tends to hurt assets. And the fact that Bitcoin moved in a very different way from the equity markets in particular was quite instructive. You'll find the building blocks of those price targets in our Big Ideas 2023. So ARK Big Ideas 2023, and they are, for the base case, I would suggest quite conservative. We've dialed some of them down since last year. I know that corporate treasuries pulled away from Bitcoin because the regulators were pulling them away from Bitcoin on their balance sheet.
While we're on the subject of Bitcoin, I'm sure some folks want to know my opinion on Bitcoin, okay? I've been incredibly actually impressed by Bitcoin over the past year. I have. I really have. I've got to say, I mean, when you think about, obviously, all the crypto brokerages, exchanges that went under, almost all of them went under, right? And you think about how much of a risk-off environment it was, how much the Fed was raising rates, margin concerns, like everything, right? Really got thrown at Bitcoin. It was a perfect storm. It was regulation talk. Like, I don't think you could have had a worse situation for Bitcoin than what happened last year. I mean, it was a million things thrown at it. And I got to say, like, Bitcoin held in there. And, you know, to be where it's at today, despite going through that storm, I'm actually impressed. I got to say that. I got to say I'm impressed with the performance given how much really got thrown at Bitcoin. And for this baby to be sitting at 28,000 right now, I mean, that's actually really, really impressive. Obviously, you had the blow off top there in 2021, right? But I kind of look at it from a little longer term perspective, like a 5-year perspective, right? And I think about where has Bitcoin been over the past 5 years? And the fact is, on a 5-year basis, it's up over 200%, despite having so much crap thrown at it, right, for the past 5 years. And so, I got to say, I'm actually impressed.
So we've pulled back there. But we do believe that the behavior of the price through this crisis is going to attract more institutions, for example. We've done a report targeting institutional investors and the allocation that they should make if they care about this new asset class diversifying their portfolios. And I believe it's somewhere between 2.5% and 6.5%. So not crazy. These are the sorts of allocations they would have made to emerging new categories of assets like real estate in the 70s, emerging markets and small cap in the 80s and 90s.
And Cathie, Ed, let's discuss some of the ways that Cathie and ARK have invested and got exposure to crypto. Of course, there's the companies such as Coinbase, but there's also GBTC, the Grayscale Bitcoin Trust, and regulation position is in the eye of the storm there as well, Ed. I mean, talk us through what the SEC seems to be pushing us towards.
Yeah, and Cathie made an interesting point there, right, about institutional investors. Cathie, if I remember correctly, back in 2021, a big part of your thesis on the run-up in Bitcoin was that more US corporates would add it to their balance sheet in place of cash. That doesn't appear to have happened to the level that you'd...
Hey, she must be adding Shopify. I haven't checked her moves recently, but the fact that Shopify's up to her 8th biggest position, that's good. I think she needs to keep adding to Shopify, I'll be honest. I don't think she should stop. I still think it's a huge mistake that she sold Palantir, and I think she should consider buying that baby back. But anyways, that's my opinion on that.
Is that because the US is just not a regulatory-friendly environment for this to happen?
Yes, in the beginning of the crisis, it seemed like regulators wanted to blame crypto instead of the significant rise in interest rates and the deposit outflows. Now we're seeing it as a solution to the problem, but the regulators are still reticent. Something interesting happened today, or maybe it was yesterday. Governor DeSantis basically said that he was going to allow, I don't know if he said this exactly, but the conclusion of his saying we're going to set Florida apart from the rest of the nation was this ability to touch companies that touch crypto. After all, these are cash deposits. They're fiat deposits. They're not crypto. And this can be done on a state-by-state basis. So I think you'll see Florida, like it has done in many other ways, distinguish itself from the rest of the pack.
Cathie Greifeld, my good friend and a just terrific reporter on the ETF Beats, has been talking about Grayscale and the opening arguments in the case with the SEC. In that discussion, how much are you considering adding to your position around trust? How are you reading how that Grayscale situation's playing out?
So it seems as though the judge is having some trouble understanding how the SEC could approve a Bitcoin futures ETF, which is swaps based and therefore has counterparty risk, but will not allow a spot Bitcoin ETF. It really makes no sense. So they'll either have to basically shut down the Bitcoin futures ETF, it seems to me, or allow a Bitcoin ETF. So I think Grayscale is doing Bitcoin a great service, and its arguments have been very sound.
We asked our audience, Cathie, what they make of the behavior in Bitcoin. This was what they had to say in terms of how the asset class behaves. Is it a must-have in a banking crisis? Few respondents said yes, no, it's too volatile was the main response. Caroline, interested in your take on that. What this all comes down to is how we're playing the interest rate environment, right? How we're reading the Fed, how we're reading across different asset classes.
Yeah, and to that point, Cathie, you have said just earlier in the conversation, the rate of change of the Fed, the 19-fold increase in interest rates that have so upended, you say, in many ways, what's happening in the financial markets and financial conditions. But we did see signaling from the Fed. They did tell us they were going to be hiking rates and hiking rate fast. Why then didn't you move your portfolio around more?
Well, the premise of the question is that we're an asset allocator. We are not. We invest exclusively in disruptive innovation, nothing else. What we did do was we concentrated our flagship strategy, so ARKK, and our other strategies, ARKQ, ARKW, ARKF, and we moved in the flagship's case from 58 names in February of 21 when we peaked down to 27, 28 names. We have a scoring system, and the scoring system is based on variables we believe are very important to innovation. And so we concentrated the portfolio. Many people In the traditional asset management world, when they go through a risk-off period, they will diversify their portfolios by moving closer to their benchmarks. What they're doing is typically selling our kinds of names.
Yeah.
And so that is why they're putting extreme pressure on them. We'll create losses by selling stocks, and that gives us a tax loss asset, which we have. It's over $2 billion right now, against which we can take future gains, and then concentrate towards our highest conviction names. We have a paper on our site which shows the benefits of this
Did you say $2 billion in losses they have?
concentration strategy during risk off and diversification strategy during risk on.